Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. Today, we're going to be talking about uranium and nuclear power. Where's the price of the commodity going? What's going on with supply demand fundamentals? And most importantly, how do we make money on this bet? Our resident uranium expert, Justin Huhn, has a model portfolio that's up about 500% for the last 5 years. Justin, thank you for coming back on the show.
It's always good to see you, Steve. How are you?
I am just fine. I've got this new tie on here. I think I'm going to make this my honorary uranium tie.
I like it.
Yes.
It's appropriate. It's appropriate color for the trading action of the last week and a half.
The missus would say it's ridiculous, but I'm a fan. Okay, let's get started off. We got a question from Esbren that I think tackles a lot of the questions that we got on Twitter and that I posted on YouTube. And he says, Justin, what do you make of the recent correction? Fundamentals continue to get better, in my opinion, but the price is correcting. Is this a seasonality thing? Traders taking profits? What do you think?
Yeah, it's probably a little bit of both. It's something. It's not anomalous in any way for anyone who's been in this sector for some time. So this sector is notoriously volatile. We have at least twice every year some 30+% washout that every single time it happens, it doesn't align with the overall quote unquote fundamentals. But this is a very, very slow summer when it comes to the physical market, the physical uranium market. And honestly, it's a very slow year so far when it comes to the term market. So the spot market, for example, we're getting like 1 or 2 trades a week for 50,000 pounds or 100,000 pounds. It's extremely, extremely quiet. There, of course, is strong silver lining to that, which is there's no volume being traded here and these prices are firm. That should be a very important tell to anybody who's following this market. This is a very slow year with term contracting. 31.5 million pounds been signed year to date. That's just about the end of the 7th month of the year. So you annualize that and you get what, 65 million pounds for the year during a year when the utilities globally are going to consume 190 million pounds. It's very, very slow. There's a lot of reasons for that. And we can get into that if you'd like, but important to note is that in this year where we've only traded or only secured just over 30 million pounds in the term market, the term price is up 16% on the year. That's really, really important to understand. So the fact that the term price is climbing up and we're right at 80 bucks a pound for term price, the spot price is at 82. That's basically a floor. It's a floor in this market. This is where the market is landing in an environment with multiple months of barely any volume being traded. Very, very important to understand. So this is multiple influences on a low volume equities market, the uranium market, right? There's not a lot of liquidity in the uranium equities market, to speak generally, especially on a relative basis compared to other sectors, even other resource sectors. So when risk goes off, it can decline quickly. When risk goes on, it can rise quickly. That's just how this game is played. And you can't have the potential for outsized returns without outsized volatility. So we're experiencing that to the downside right now. So I would chalk it up to extremely slow summer trading. That's the primary influence of this. Nothing is happening in the spot market. And unless you have a broader picture and a broader understanding of the reasoning for that, you're going to think as, let's say, a newcomer, hot money into the sector, maybe you bought in earlier this year on the momentum trade, whatever it might be, and your cursory understanding of the sector, you might think trade over. This is a thesis killing experience that we're having right now, and that is not the case. So we think the setup is very, very similar to last year. And we just wrote about this in the most recent monthly newsletter. And what happened last year, we had a couple of RFPs come into the market when the market was quite thin and the price took off. It's not going to take very much buying pressure to move this market back to the upside and the physical side of things. And the reasons that are allowing utilities to hang out in Saint-Tropez instead of calling Cameco are temporary phenomenon. So the slow summer trading that's typical, that happens every year, but also the reasoning for staying out of the term market, not having to buy in the spot market in heavy volumes, pulling forward material last year, flexing up on legacy contracts, and third, sitting out as long as possible following a doubling of the uranium price that happened in the second half of last year. That's a historically gigantic move. So when something like that happens, if you are responsible for buying that thing to fuel the reactor that you're working for, you're not going to chase that price. You're going to sit it out as long as you can. And if you've pulled forward material from Russia, if you've flexed up on contracts from all sources over the past couple of years, since we've been in a rising price environment, which every utility has to the extent that their contract allowed for it, that gives you a little temporary buffer to sit back. So this is the sitting back. In our estimation, we are closer to the end of this consolidation than the beginning. We think we are probably weeks away from a move. In fact, I wouldn't be surprised if this week is actually the bottom for the equities, kind of looking that way technically. With that said, I'm not going to plant my flag there because we're in a weird world where there's some very weird things happening geopolitically. We have the S&P that's just off all-time highs. It's got a lot of airspace below it. If it decides to take a nosedive, it's probably not going to be good for any sector. So with all of those caveats, we're coming towards the end of this slow summer session. We have Cameco's conference call next week. The following day, Kazatomprom has a trading and market update. 2 weeks after that, they're going to do a conference call, or 3 weeks after that, excuse me, a conference call for the first half of the year. Then we have WNA in early September, and that leads right into what is typically a strong season. So considering how long this consolidation period has spanned, both for the physical market and for the equities, we think it's setting up for a good move.
Okay, I'm going to share my screen here. And so you were talking about so this is the spot price of uranium, the uranium futures here. And we could see we've gotten a nice, if we count 1, 2, 3, we're on the fourth, a quadruple bottom, I would call it, right around $82, which is the spot's 82, term is 80, both right about the same, which is kind of cool. I don't know, as a trader, I can't help but notice that.
Absolutely. Yeah, it's we have revisited the low 80s 4 times in the last, let's say, 5 months. And the interesting thing is that some of the same buyers have showed up at that level. And buyers that are typically sellers or have typically been sellers, in particular, the Chinese have been buying in the spot market when we see the volumes, the price get down at that level. Not seeing a huge amount of buying happening at this present moment at 82 a pound, but pretty confident that that's going to remain a floor. It's hard to say there's any real motivated selling happening around at these prices, or honestly at any price between here and the low 90s. There hasn't been an enormous amount of material coming into the spot market. So the price moves and the vacillations of the spot price have primarily been influenced by the amount of buying or lack thereof rather than motivated selling. It's still a relatively thin market, but considering the low volumes that have been traded over the past few months, there's a little bit of wood to chop there. So once we see some volume come in, likely what will happen is something similar to what we saw last year, which was not insane amounts of volume, but once the trend was in place, you saw sellers pull back. And that's typically what will happen in a thin market, is the inventory you're holding that's potentially for sale becomes far more valuable in an uptrend. And if you can sit back and sell it the next week or the next month, you're probably going to be in a better position than selling it now. And that's the mindset that happens in those uptrends. So right now, not a lot of motivated selling, but also not a lot of motivated buying. And we believe that the pressure in this market is going to be to the upside, not to the downside going forward. And there's strong evidence to suggest that, which primarily would be the trend of the long-term price. It's up. So when we're seeing 20%, 30% of what we signed in long-term contracts year to date this year compared to last year, yet the price keeps moving higher. That's a very, very important tell that everyone should be aware of.
Yeah, those low volumes, I didn't even know that they ordered 50,000 pounds at a time. I thought the minimum was 100.
100,000 pounds is usually the typical smaller trade, but you'll see a 50,000 pound trade done here or there.
Okay, okay. And that's pretty good news that they haven't done a whole lot of buying. There hasn't been nearly the pounds traded this year so far that there normally is,
That's correct. Yeah,
meaning
the
that there's a
term
lot more
market,
to come.
there is and honestly, despite the slow official trading both in the spot and term market, we communicate with fuel buyers and traders all the time, and there's a lot of interest, a lot of discussions happening off market between producers and utilities. So that is atypical for the summer. Of course, the U.S. utilities, which is the largest market in the world, 25% of annual demand right now. In a couple of years, that's going to change with China's build out. But as it is, the U.S. is still the biggest market, and generally speaking, still the least covered. Their inventories have risen year over year from last year a little bit. They've got a little bit more than 2 years in inventory for the utilities. That's across the fuel cycle. But if you think about it, it takes about 2 years to run material through the fuel cycle. So the U.S. utilities will always keep about 2 years minimum in general inventories. So even though the U.S. utilities are generally decently covered in the near term and 100% focused on the Russian waivers process, there's still a lot of discussions happening between U.S. utilities and especially U.S. producers, but producers in general. So the interest is there. What we think is going to happen is there's going to be a sizable RFP or a large term contract that gets done at these prices. And that's going to be a justification for these prices to any other utility that has to do some buying, that is sitting on a wing and a prayer waiting for the price to fall back to previous levels, which it isn't going to do.
Okay, that pretty much answers Money Talk's questions about the fuel reserves of the utilities. We got a lot of questions on Kazatomprom and their recent tax deal. Liberty, Sylvia, Sam, Raymond, and Elder Catch want to know. Maybe you can kind of give us an overview and I'll see which questions weren't hit.
Sure. So a few years back, the state of Kazakhstan had implemented a 6% flat tax, essentially, for all uranium production in the country. So that's for Kazatomprom, which is a state-owned entity. There's 70% state-owned, excuse me, 75% state-owned, 25% public, but they're still considered basically a state-owned company. But all of the joint ventures with 2 or 3 different Chinese entities, the Japanese entity, Uranium One, Rosata, and multiple Russian joint ventures. Russia has the most joint ventures with Kazakhstan, with Kazatomprom, Cameco, and Orano, right? They have a lot of joint venture partners and projects. So any amount of uranium that is produced with various projects individually, and despite what the selling price of that uranium is, 6% tax. So now what they've just implemented, let me see if I can pull this graphic up in the background. I think I still have it here. Yes, I do. So now what they've just implemented is a different approach, and this starts January 2026. This is going to be a progressive tax, not a marginal tax, but a progressive tax. So starts off up to including 500 tons per year, right? So if you take tons of uranium is not like a metric ton. For weight purposes, a ton of uranium is roughly 2,600 pounds. There's actually a good kind of different calculator of all of the various elements of the fuel cycle on TradeTech's website. If you Google search TradeTech uranium tons, TONNES, you'll find that calculation. But multiply tons in the uranium nuclear world by 2,600 to get that amount of pounds, right? So you have, what is that? Just over 1 million pounds, right? Or 2 million pounds, up to and including 1,000 tons, 6%, up to and including 2,000 tons, 9%. And it goes all the way up until the point above 4,000 tons on an annual basis, 18% tax rate. And there's a kicker to this. In addition to the volume-based tax rate, you have a price-based tax rate. So not the profit margin of what you're selling, but the sales price of that uranium. So this is added to that volume-based tax, starting at 0.5% above $70 a pound, going all the way up to above $110 a pound, 2.5%. So theoretically, the largest projects in Kazakhstan, they could see 20.5% taxation on that uranium production, where right now it's 6%. It's a significant rise in taxation. So we think there's multiple implications, but I would argue that the most logical implication is that this is going to influence his prices to go higher. even with this higher tax rate, it's still the cheapest uranium production in the world. So, and multiple entities that are joint ventures with Kazatomprom need that uranium. The Russians need 6,500 tons of natural uranium per year for their own reactors. Okay. They also have the biggest export program in the world. They've got plenty of conversion, they've got plenty of enrichment. They don't have a hell of a lot of uranium. So the Russians essentially are short uranium. They need it. Chinese, they're grid connecting 6 to 8 reactors a year. They need that uranium. So will this higher tax significantly influence them to produce less in the country? Highly unlikely. I don't think that's going to be the ultimate implication. It's not going to affect Kazatomprom as much either, because they are a state-owned entity and these taxes are paid to the state. It's kind of right pocket, left pocket. But for all other entities, Orano, Uranium One, who does sell uranium in the market, Cameco, and the Chinese entities who also on occasion sell uranium in the market, it's going to influence, and of course Kazatomprom, it's going to influence the price of uranium in their contracts. So they're going to have to pass this increased cost on to the consumer. I mean, that's really the most simplest way to put it. They're not just going to eat it. Nobody would. Okay, it's like the minimum wage tax, minimum wage hike in California. The companies don't just eat it; they cut their workforce, and it's difficult for them to understand that that's the real world consequences of that platform. But that's what happens. Nobody just eats increased costs; they pass it on to their consumer. Same thing is going to happen here, and the fact that this is the largest producer in the world means this is going to be pressure to the upside on the price. Will it marginally disincentivize the pace and the aggressiveness of ramping production? Possibly. It's possible. It certainly is not going to incentivize them to produce more. Clearly, I think that's pretty obvious. But I think most likely the primary thing is going to be an upward pressure on the price and yet another element that is going to support this current pricing environment that a lot of utilities are still hesitant to dive into, let's say.
Okay, so it's kind of a scaling tax that the more they produce, the more they get taxed. And I just did the math here. 4,000 tons is equal to 10.4 million pounds. How much do they annually produce each year? It's more than that, isn't it?
On a 100% basis, so all projects in Kazakhstan, all of the joint ventures and Kazatomprom combined, they're producing about 60 million pounds a year.
Oh, wow. Okay.
Yeah. So I
they're
don't
going to be
think,
taxed over 18%.
yes, I think there's only one project, maybe two, that are at that highest rate, but certainly there's plenty that are down in the 12, 15% tax rate. And then of course the price of uranium sales is going to add a little bump to that as well. Yeah. But just sorry to hammer home a point, because you mentioned the progressive tax, and it's not a marginal tax. So if the project produces more than 4,000 tons a year, all of the uranium sold from that project is taxed at the higher rate, not just the pounds above that cutoff.
Okay. And just like anything else, they're not going to eat it. They're going to pass it on to who's ever buying it and eventually the utilities.
I believe so.
Okay. Yeah, that makes sense. It's like you said with the minimum wage. I remember my buddy, he said he went to McDonald's the other day and a Big Mac meal was 18 bucks. Like, well, there's your minimum wage for you.
Yeah, pretty much.
That's what it is. Okay. I think we hit just about all the questions. Sam wants to know, will the JV partners, are they going to possibly pull out of this partnership, you think, or
No,
no?
no.
Okay.
No, it's still the most reliable and cheapest production, despite the problems they've had with workforce and sulfuric acid, et cetera, et cetera. It still is and will be the largest, most productive place on Earth for producing uranium. And they'll probably have more joint venture projects as we go forward, even with this higher tax regime. Just means you got to pass that cost on. But still, going from 6% to 15%, that hurts, and they got to pass that on, but it's still far, far less expensive than setting up a new project outside of Kazakhstan. Nothing can touch their production costs.
Okay. What are they at? Like 20 bucks a pound or something, or?
Their cash costs are low, below $20 a pound, to speak generally across most of their projects. But their all-in sustaining is a bit higher than that, and then they're fully allocated, including the dividend, is in the 40s a pound.
Okay. Okay. But still half of what current prices are, so they're printing
Yes.
money.
Yes.
Okay, got some questions on the Russian ban. What doesn't that go live in like August 11th or 14th, or it's in a few weeks, right?
It is. It's in about 3 weeks. It becomes law. It's a little bit of a black box right now. I'm not getting a lot of solid information in terms of will 10x issue force majeure based on their warning that happened right after this got its signature. They issued that warning, and that 60-day period has passed. So we haven't heard anything on that front. We did hear just a few days ago, and everybody heard really because it was made public, that the first waivers were rewarded to 10x, or excuse me, to Centrus. This award is on behalf of multiple utilities. So because Centrus essentially in this case acted as a broker for this the uranium coming through Russia. So the utilities were the ones that had to make the case that importation or that shipment was and is essential, and they have successfully made that case. And that's the first one that's been issued. So what's interesting, so there's I guess there's positives and negatives about this. The negative would be that if these utilities did secure outside Russian material contracts to be delivered in the near-ish future, it's possible that that material could then be sold into the market. But of course, that's EUP. The EUP market prices is very, very high. So it doesn't really affect the uranium market that much. The upside is that because they are receiving this, they are going to have to send return feed, as you always do with Russian enrichment imports. So when you buy enriched uranium from 10x, you can send them the feedstock as a return rather than having to send it up front. That's different from a contract with Urenco or Orano, for example. You have to provide the feedstock prior to your material being spun and enriched and sent back to you. It's opposite for the Russians. They send the material to you, you send them the feedstock back. And generally speaking, utilities usually do not buy the feedstock that's necessary to send back to Russia until they get the material. Why? They haven't had to. It's been a liquid, cheap market forever. So the utilities that are going to receive this shipment, they're going to have to buy uranium and have it converted. If they can't find spot UF6, send it back to Russia. There's complications around all of this. There's still unknown solutions to this problem, which is international entities who have contracted with Framatome to have enriched uranium fabricated into fuel, importing Russian uranium into the United States to be fabricated and then sent back to their facility. That's still seemingly a mess. And one more note on this process is that the DOE has been essentially informed or convinced by various players in the sector, let's say. I'm trying to speak in a shrouded manner to preserve anonymity, that they are going to, in this waivers process, have to request from utilities to provide to them evidence in their contract book and expected deliveries that they don't have the material that could replace the Russian material. So the utility, the initial application is like, hey guys, we really need this because we only have this on hand. But now they have to prove that they don't have a backup shipment from somewhere ex-Russia coming in the next month or 2 or 3 or 6 that could actually get them out of that bind. If they do have that, then theoretically they're not going to receive those waivers. With all of that said, I think there's way too much emphasis and attention being paid to this issue because these imports are 100% cut off in 3 short years, which is tomorrow in the nuclear fuel cycle in the nuclear world. And so this material is basically illegal. Any utilities in the US that have expected shipments of Russian material beyond 2028 have to renege on those contracts and source it elsewhere, period, the end. So with all of that said, this is really not as big of a deal as it's made out to be. And they're still working through that process of figuring it out. So the US utilities still are focusing on this because if they can get that material, they're going to do everything they can to try to get those waivers because those legacy contracts with 10x that were signed 2, 3, 4, 5 years ago that are being delivered on now and in the next year or two, way cheaper than what they would have to pay to go in and buy spot EUP in the market right now. Like 25%, 30% of the cost.
Oh, wow.
So
okay.
They're going to do everything they can to try and get those deliveries and let them do it. Let them do it. They got to shore it up. They need to get that. Doesn't help them going out 5 or 10 years from now. which they're very, very uncovered in that time period. And there's a lot of interest late decade into the 2030s in the term market right now. And as soon as this issue is dealt with, U.S. utilities are going to be back in the market, securing their needs beyond that time frame.
I gotta believe, maybe I'm wrong. I don't remember if I heard this on an interview with you or someone else, that maybe some of the slowdown of U.S. buying is they're working on the paperwork to secure this to make sure they don't have to pay 25% more.
Oh, 100%.
Okay.
100%. Because think about it, if they were to be more aggressively in the term market right now, buying at these prices versus, let's say, buying 6 or 12 months from now, maybe they have to pay, $100 floors instead of $80 floors if we see the market do that. That's less of a price hit to their bottom line than not receiving the Russian material and having to buy spot EUP for near-term delivery. So if they can secure this, that's far more beneficial than them securing long-term contracts for a period that's still years away at these prices, instead of like 80 floors, 130 ceilings, 100 floors, 150 ceilings, right? Like that makes a difference for their bottom line, but it's not as much of a difference as paying a third of what they would have to pay for short-term delivery EUP.
Okay. All right. That answers Tidy's questions. And Elder Catch, Trader wants to know, just kind of big picture view. What are the catalysts for the equities or the spot term price in the next 12 months or so?
Catalyst for the equities and the spot and term price?
Mm-hmm.
I would say, I mean, I hate to just speak of catalysts, but oftentimes when the market is very, very quiet, it usually takes something to kind of kick everybody in the pants and go, oh, this is still happening. We're just going to need to see evidence of the price moving higher again. Because a lot of times what happens is you have this long period of consolidation and people get frustrated with waiting. And especially if other things look more attractive to them at the time where they're waiting. You've got dead money sitting in a sideways consolidation, but you think gold and silver are about to moon. Sometimes you'll see traders peel off a little bit of their exposure because they're just bored and put it into something that they think is going to move sooner, right? That happens all the time, and that selling on the margin can affect these equities. The moves over the last few days have been far more violent. Honestly, I mean, seeing Cameco down almost 5% in the open this morning, that smells of like an institutional, I don't want to say blow up, but something along those lines. Who knows? I mean, who knows if institutional money has had marginal exposure to this tiny sector and also shorting the S&P, right? Like, you never know. There's always crosswinds, and the small sectors can sometimes get hit by these crosswinds. With that said, I think the catalyst for the physical market is just any volume coming into the physical market. We're going to see the price move. So as soon as that happens, the price starts to move. It gives people hope that we're going to see another run in the sector. So I would say for the equities, the catalyst for the equities is going to be the movement in the price. It's hard to say what to expect out of Cameco's call. I don't think there's going to be any bombshells upside or downside. My understanding in our last conversation with Grant Isaac is that they haven't yet made the decision to increase production out of MacArthur. He's talked about the ability to do so, to go from 18 million to 24 million pounds a year. But that is an extremely complex mill, an extremely complex mine, but especially the mill, the chemistry and the way that the mill works is unbelievably complicated. So this is not them flipping a switch to go from 18 to 24 million. It's a big ask. It's a lot of CapEx. It's going to take years for them to accomplish that. But as of our last conversation about maybe 6 weeks ago, he said that they hadn't officially decided to do that. I don't think there's going to be any real bombshells from the Cameco call. And given the performance of the sector leading into this call, you can't really fall far from the basement window. So usually in a Cameco conference call, 3 times out of 4, the sector sells off. It's just, it's how it goes with the Cameco conference call. I don't know why. It just is. Maybe because the market tends to get excited for the next catalyst, which is going to be this call, and they price in something that the guys from the company don't end up disclosing. All right. So that's that. But the Kazatomprom thing, I think, is bigger. And I don't have any predictions on what the company is going to say. I don't know what they're going to say because there's obviously a history of them saying something only to pretty quickly come back and say, just kidding, that's not going to happen. I mean, for them to say in September of last year, they're going to 80 million pounds a year in 2025, and then to renege on that statement 4 months later, they knew in September that they were not going to be able to achieve that. What changed between September of last year and January of this year for the company, for them to say, just kidding, that's not going to happen? Not much changed. So I think that they were trying to give a signal, perhaps to their shareholders, perhaps to Samrat Kazina, that they have the intention of ramping production into a bull market, right? That's what the company wants. That's what the primary shareholders want to hear. Primarily, that's Samrat Kazina, the sovereign wealth fund of Kazakhstan. They want to hear that production is going to increase because the profit margins are off the charts. So they're going to say that they intend to do this, but then reality comes rushing in. And it's very, very difficult to do this. And there's multiple reasons for that. So judging by, I think it was the most recent, was it CGN or CNNC? I apologize, I'm forgetting the most recent quarterly update from them, where they were able to increase production in their deposits out of their joint venture projects in Kazakhstan. Okay. But we do know that others are in decline. The sulfuric acid situation is still a problem. And until and unless we see, on balance, on a 100% basis, significant more expenditures on acid and significant more capex on wellfield development, we're not going to have a ramp in production. So we have to keep watching that quarter over quarter. We haven't seen a lot of evidence to suggest their production next year is going to be significantly higher than this year. I do think they probably will signal to the market that they're going to increase production, but I don't think that they're going to achieve the levels that they're going to say that they're going to reach. And the really big production increase that's coming primarily from their Russian joint venture, the Budenovskoye 6 and 7, our understanding is that's progressing very, very slowly. They have to build a unique processing facility for those deposits. In the meantime, they have to ship it to another processing facility, which is going to limit the annual production levels from that deposit. So if you look at their production profile, a graph of their potential production ramping profile in even their most recent investor handout, it just goes straight up and it goes straight down. Well, the top 15% of that just isn't going to happen. And it's certainly not going to happen in the timeline that's suggested in that graphic. If and when they've got this new processing facility at Budenovskoye, they pump a bunch of money into wellfield development, they shore up skilled labor for these Russian drill rigs to operate because they're going to need more of them in order to develop more. And when their sulfuric acid facility, which is in very, very early stages of construction, when that's operational, when all of that happens, 1 year later, we'll see a bigger bump in production. So we don't think that physically can happen until probably 2028 at the very soonest. And even then, we're dealing with certain deposits are going through more rapid decline rates than others. Some of the big deposits like Inkai is just a monster. That thing can keep on chugging for another 20 years. But there's other deposits like Kartau that are decent. Ordolik is in a faster decline. So you have decline rates that you have to, if a deposit is declining, if you can't expand into another area of the deposit with similar grades and depths, the only way to produce the same amount, let alone more, is more acid, more well fields, more acid. Because if the actual rates of mineralogy, the actual grades are declining, because you always go for the nose first, you always high grade. When the grades are declining, the only way to maintain, let alone increase, is more acid and more well fields. So new deposits like Budenovskoye, there's a new project with Catco, the French joint venture, that's it's smaller than Budenovskoye, but those projects, that's where you can actually get a ramp in production, but you have to get the well fields in and you have to have more acid. So not only more acid on balance on a 100% basis, more acid per ton of production as deposits decline. So with all of that said, they're printing cash. They are by far the lowest cost producer in the space. They are probably the biggest value proposition in the space. With all of that said, it just has a jurisdictional discount attached to it that I don't know if they'll ever be able to shake. But either way, the big production increase that they initially mentioned in August and September of last year, we don't see that happening until best case scenario, probably 2028.
Okay, well, that's good news. Yeah, and the sulfuric acid, that's not even going to be, their plant isn't even going to be ready till like 2027, right?
Well, they initially said 2026. I think they were deferred that to 2027. That's really the big linchpin for them, unless and until they can import cheaper and higher volumes of sulfuric acid, primarily from Russia, or for some reason the domestic sellers, which, by the way, are selling sulfuric acid for very, very high prices, are mandated to prioritize agriculture, are not necessarily keen on more production happening in the country. Take that for what it's worth. So it's not going to be necessarily smooth sailing to just knock this thing out. And the previous plant took, I think it was 4 or 5 years to build back in the early 2010s. So 2027, I think, is kind of bright siding the potential for that. But who knows? Anything's possible.
Okay. All right. Question from Lucian, the Triangle investor, says, do you think NexGen Rook and Fission PLS project will produce uranium in this decade? If so, who's first in your opinion?
Well, I do know that NexGen is much, much further along in the process of development. So they haven't started actually building the mine yet, but they are, what, 3/4 or 4/5 of the way through the EIS process. They have agreements with the local indigenous people. They've been moving much more forthrightly towards actual project development. With that said, PLS is shallower. It is under a lake, but my understanding is that there's an underground mining method that they can kind of skirt that issue, and supposedly the geology is intact to allow for that. I'm not a mining engineer, so I can't confirm that, but that's my understanding. I also believe that there is, I think it's the provincial environmental assessment is not needed. It's either the provincial or the federal. So they have one less kind of major step to achieve compared to NexGen. But it's really interesting. The Fission project is really interesting. I don't know why they haven't moved more forthrightly towards development, and I don't know why it hasn't performed in the market compared to other stocks with similar projects, or let's say similar potential production profiles, etc. It's one of those things, like I don't want to say anything good or bad about either company, because I would prefer to not talk about companies specifically, generally speaking, outside of the newsletter. But we're kind of in the stage of the bull market for uranium, where the wheat and the chaff have sort of been separated. Are there extreme value propositions? Are there gems in the rough that for some reason the market just hasn't discovered yet, and everybody's got it wrong? Yeah, maybe, but probably not. I mean, I think that there's still, especially with explorers, because explorers, it's a tough game, right? Until you're big enough to be in the ETFs, you got to fight for every penny. And if you want to do any meaningfully sized drill program, you got to dilute the hell out of your people. And it's a tough game for explorers. It really is tough. But there certainly are exploration companies that are less than 50, 100 million that could hit something and see enormous gains. But kind of at this point, I think the market has sort of sniffed out what's working and what isn't. And that's, maybe that means something, maybe it doesn't. I should probably just leave that there. But let me answer Lucian's question. Do I think that either of them will be mined before 2030? I would say it's possible, but conversations with people in the nuclear industry, in the mining industry, that have seen big projects like this be developed in the past, they believe that it's unlikely. They believe it's an early 2030s story. And to be fair, every year that gets deferred for either of these projects in terms of when pounds are going to first come out of the ground is probably ironically great for the stock and great for the sector, right? So it's one of those things. It's one of those weird things in this sector that's kind of perverse, is when a company reports bad earnings and they got to bring production offline, or they got to buy in the market and it hurts their bottom line, stock goes up. So it's just kind of how it is. But either way, that project, NexGen's Rook one is a monster, at least for the first 5 years. PLS is smaller, but a little bit more long-lived, if I recall correctly. You have Denison's Phoenix, which is also a pretty robust project for the first handful of years. When all of those do come online, that probably is going to come close to balancing the market for a point in time. So it matters to watch these projects, but it's more difficult to say for PLS. For NexGen, I can say that the company appears to be doing everything they can in the right way to progress this project towards production on their own.
Okay. All right.
But with that said, the people that know mining don't think it's going to be a walk in the park. We're talking about the largest uranium mine ever built. We're talking about almost 30 million pounds a year at 700 to 900 meters deep. Like, even though they don't have to do the freeze wall thing like with Cigar and MacArthur, still it's no walk in the park.
Okay, that's a huge. That's like 1/6 of the annual demand or something like that. Okay. John wants to know, what do you think of the Paladin and Fission deal? It was, I think, 1.4 billion in stock. Is that right? Something like that.
I think that you could probably argue that Fission is cheap relative to peers. If we're talking about just a basic metric of, let's say, market capitalization divided by pounds in the ground, right? It's probably cheap relative to peers. You could probably also argue that Paladin's paper is very, very valuable. That's, I think, the long and short of it. I think Paladin is trying to add some future blue sky to what they currently have with an operating project. The deal at this point, in honestly 24 hours after the deal is announced, pretty much the market prices it in. So there isn't really much of an upside at this point. I haven't looked at these two stocks closely and done the math lately, but I don't believe there's a whole lot of upside left in the deal. With that said, I have no idea if Fission is going to get 2/3 of the shareholders to vote yes. Because there isn't a huge premium, there's quite a few people that have been holding the stock for a very, very long time and watching it generally underperform the market that probably were hoping for a bigger premium in a takeout scenario. But you could also argue that Paladin's management has done a good job with that company and brought that Langer Heinrich back from care and maintenance into production. And maybe they would like to see a little bit of the management shakeup and see it under new hands. I don't know. I can't really predict the future on whether or not it's going to be voted on, but just to speak generally, M&A is usually good. It usually means that the players in the sector that have some cash or have some expensive paper believe that the bull market is going to continue and therefore want to spend some of that paper and bolster their book. And I think that's a positive sign for the sector.
Okay. Jeff wants to know. It says, what is the main factor preventing a massive rollout of small modular reactors?
I would say it's just the first of a kind getting done. Like once we have the first of a kind built and we have some numbers on what it cost and how long it took and they're operating well, that's the main block. So that first of a kind is very, very important. So we have a few first of a kinds in production or in development right now. We've got GE Hitachi's BWRX 300. It's 4 of them being built in Ontario right now. And then we have the 2 demonstration projects in the United States. That's X Energy's XE100 and TerraPower's Natrium. TerraPower's Natrium's got a jump on the other one, and they're actually breaking ground in Wyoming right now. So I think that's the biggest block, is just having one of whichever design built. And so we can see the numbers of what it costs. We can go, okay, it's X per megawatt hour, whatever. And that is going to give confidence, hopefully, to other potential suitors. I know more about this in the United States versus other countries. I know there's many other, the UK is going through their process of selecting a design. I think they've narrowed it down to 4 designs. It was 5, now it's 4. So there's, I think Rolls-Royce is probably the front runner in that. And then the BWRX 300 for GE Hitachi is like, there's MOUs around the world, dozens and dozens with this design. So that seems to be kind of a front runner. It's also not a quote unquote advanced reactor. It's just a smaller boiling water reactor. So the engineering is understood by the industry more thoroughly, let's say. But yeah, first of a kind getting done. And then in some areas, I think backstopping is going to be helpful to getting them off the ground. So like financial backstopping from the governments. This is something that the utilities in the United States continue to ask for. And then the DOE continues to give more and more and more support. And they're like, what else do you want from us? And utilities are going, give us billions of dollars of backstopping. So if it goes over budget again, we don't have to file for bankruptcy. So the utilities in the United States, like 3/4 of them want to build new nuclear. There's permits for at existing nuclear sites to build new additional reactors at these sites. I think there's 18 sites that are already permitted for new reactors, but that's of course only for approved design. So that's going to be whatever boiling water, light water reactors have been built in the past that have licenses. So, but they all are interested in new nuclear. Prior to the more recent obvious trend of electricity demand growing so fast, they all wanted to do SMRs and nobody wanted to build an AP1000. That's kind of shifting now, where it's like, okay, the demand is going to be there. We're already permitted at our site. We just built one of these things. Yeah, it took forever and it cost twice as much as we originally thought at Vogel in Georgia. But now they're leaning towards both looking at SMRs and building new large nuclear. So I think it's really just that first of a kind getting done, I think is really going to kind of snowball these things, and especially with the first ones that are off the ground. And that's primarily GE Hitachi's BWRX-300. But hopefully I have high hopes for both the XE100 and the Natrium reactor, the demonstration projects. The XE100 is really an interesting use case, like the MOUs that's been signed with Dow Chemical in South Texas. Like they want the steam more than the electricity and the heat that is generated by these reactors. So there's a whole market for these very high temperature small modular reactors. And then the Natrium has a unique design where it can cycle up and down more easily. So that's something that could potentially be strategically located in areas with a lot of wind and solar that are intermittent because they can cycle up and down more easily. So these things just take time. And I think you're not going to see willing financial first of a kind risk being taken by most utilities. So this is something that perhaps this is where a bridge could be formed between tech companies and utilities, for example, because the tech companies need the juice and they have the cash. And so I think they're going to be far more willing to take that financial risk than the utilities themselves. And I think case in point, this is happening right now in Wyoming because TerraPower is co-owned by Gates, and he's, obviously one of the wealthiest people on the planet. So we'll see. There's a lot of exciting momentum there, but it just takes time. It takes time for those first ones to be built.
Okay. Mike wants to know any updates on Niger. That's kind of been a hotbed recently.
Yeah, Niger has been an interesting one. The French have still had a hard time exporting uranium out of the country. And there's a lot of kind of anti-French sentiment in the country following the coup that was just about a year ago. So they have been able to continue to operate at Somer, still mining and processing ore, but they haven't been able to export it in their typical fashion. So that's a problem for them. And they basically came out with a public statement within the last 30 days saying, hey, when are we going to export this? If you guys don't allow us to export it, we're going to have to shut the mine down or at least stop its operations temporarily until we can export it. That's obviously not a great look for the country since the French have been producing there for what, 40 years, 50 years. More recently, they've had the French had the Amaurin permit revoked. GoVX lost their permit from Aduela. And in both of those cases, it appears that the Ministry of Mines for Niger is kind of sticking to the letter of the law here. They want projects in the country to get into development, and if you don't move dirt around within a certain time frame, then they'll revoke the permit. And that's what happened for both of these projects. So you could argue that that is what happened, and you could argue that with perfect utility, but that doesn't necessarily look good either. I mean, something similar happened with Western Uranium and Vanadium in Colorado a few years back. I don't know if you remember, but they were told if that mine wasn't in development by X date, that they were going to lose their permit for the Sunday mine. And within a few months of that date, they started pulling ore out of the mine and setting it on the ground on the pad outside the mine shaft, and got into development and saved their permit. So this stuff happens even here, but it's not a great look. As far as the big development project there, which is Global Atomics DASA, as far as we understand, they continue to have the full support of the government, which is the 20% shareholder in the project. So there has been nothing to suggest that their mining permit or their mining license is at risk. But when you see all of these other geopolitical things happening, especially around the mining sector, it gives shareholders certainly leads them to take pause. So Global is just in a situation they need to finance this thing. They need cash, and they were trying to do that without diluting, primarily by going through the debt financing. And as you might expect, some banks, they've been dealing primarily with the U.S. They haven't wanted to issue that credit. So now the company is left to come up with other solutions, and we're going to wait and see what those are. We understand there's multiple suitors for this project. It is a fantastic project. So the Chinese just built a massive oil pipeline in the country. Perhaps they go knocking on the door. I don't know. We'll see. It's a very important and larger project. So it's one of those things. It's bad for the company. It continues to be delayed. It's good for the sector.
Okay. All right. In light of recent events, we got three people asking, Leonard, Alex, and Deep River. They're basically all asking the same thing. If Trump is elected, what effect what catalyst or what threat could that have to the uranium industry?
I don't think it's going to meaningfully change things. The uranium sector is really kind of insular. It doesn't really get that affected by, let's say, rising or falling oil prices. Natural gas is already dirt cheap. So even maintaining oil production levels and having that secondary gas production out of the shale is something that probably is going to continue for a while. So the take the natural gas plants are going to be attractive for meeting this electricity demand is probably a correct take. But a lot of the thesis, I would say the entire thesis for being long uranium and bullish on nuclear going forward here has basically nothing to do with new nuclear being built in the United States. And this is a notion that is 6 months old. So this is not something that we've bet on at all ever and still aren't. So I don't think a lot of the momentum for supporting nuclear, Trump is pro-nuclear. He's obviously, from a businessman's perspective, is critical of the most recent project with how much it cost and all of that. But he's not going to, let's say, support early retirement of nuclear plants in the United States that are absolutely vital to the grid, especially in a rising electricity demand situation. So it's likely, if he does become president, that he will probably influence the ending of the war in Ukraine, which will be a fantastic positive for the world. Does that mean that the Russian waivers will be revoked? Or excuse me, that the Russian ban will be revoked? I don't believe so. That is law. So he can't just make it go away with a swipe of the pen, even if he wanted to. And I don't believe he's pro-Russia, despite the table pounding from the media. But I think he wants to end that war. So will that de-bifurcate the market? Perhaps a little bit. I don't think the Russian ban is going to be reverted. That would have to go to a legislative vote for that to go away. So that's probably going to remain in place. And of course, Trump is also very much pro America for America, right? So I think less reliance on Russia, or anyone for that matter, to keep our lights on is probably something that he would support. And lastly, I would just say that a lot of the pro-nuclear elements that have been moved forward with the Biden admin have been spurred on not by Biden himself, which might be an extremely obvious statement, but have been spurred on by DOE lifers. These are people that have been in the Department of Energy for decades through various Republican and Democrat administrations. So these are people that are very supportive of nuclear. They're very proud of the work they're doing. And this is part of the overall trend globally. So with all that said, what has happened in the past 3 years for nuclear in the United States is phenomenal, and I absolutely applaud it. And I don't expect that Trump is going to reverse any of these things. He wasn't exactly a fiscal conservative when he was president going back to 2016. So I don't think it's going to change a lot, to put it into a soundbite.
Okay. All right. That's good news. All right. This is just my own thoughts. We were talking last time you were on this show about the increased. This is a catalyst that you and I never would have saw a year or two ago. The AI data center demand, and according to an AI search, data centers use 1 to 2% of the world's electricity, but that percentage is expected to increase to 3 to 4% by 2030. In the US, data centers use around 2% of the country's electricity, but some reports estimate that that could increase to 7 to 9% by 2030. So, pretty cool there. I didn't even see that catalyst coming, but it certainly can't hurt the nuclear story.
It's pretty wild. These numbers are massive, and it's happened very, very quickly. The main thing in our estimation this is going to affect is life extensions of the existing fleet. It probably has to do with the fact that it does take time to build a nuclear plant. Even in the best case, the Chinese take 6 years, 6 to 7 years. The Koreans built, the plants in the UAE in 6 to 7 years per reactor. So it does take time. So if that demand is going to be huge in 4 years, piling into new nuclear projects doesn't solve the problem in that time frame. But you also have to consider that we can make projections for that time frame, but also if you project out to 2040, they're expecting this isn't really going to go and then peak and stop, if I understand the way that machine learning and AI consumes data. It's a snowball, and it's actually pretty wild. It's kind of scary how fast it's growing, if I'm completely honest. But I think that it's going to be an all of the above solution. Existing plants that can be maintained and life extended will be, especially if they're profitable, and they are increasingly profitable in this environment. And we're already starting to see kind of some headbutting around electricity availability for, let's say, society at large versus a data center. And if a data center is going to swoop in and pay whatever rates the utility wants to charge to secure baseload clean energy, they're going to do it. What does that mean for the residents on the other side of the river? Are they going to have to pay higher rates because of that data center? Probably. Are they going to see less electricity availability? Definitely. So the only way to shore that up is either A, to deny the electricity that the tech companies are demanding. Probably not going to happen, especially if what they are storing is either A, vital to the federal government, which I don't think it's an accident that most of the data centers in this country are right around DC. They're probably spying on us right now, Steve. But
Probably.
but also, I think that AI is going to become embedded into most, if not all, technological processes that fundamentally underpin society's functioning. So it's just like the internet, a few years into the internet, you couldn't really put the toothpaste back in the tube. And I think that's the way that this is going to go. And it's going to take some time, but it's going to kind of snowball. But I think we're going to be at a point in 2 or 3 or 4 years from now where we can't deny AI the electricity that it's going to need. Data centers are going to continue to be built. AI is going to keep just consuming electricity like crazy, and we're going to have to meet it. That's my prediction. And I think has enormous implications for investor opportunity, probably on the long and short side. And I think nuclear is one of the elements that's going to benefit from it on the long side. I also think that natural gas plants, solar and batteries, it's going to be all of the above. It's a huge new trend, and it doesn't look like it's slowing down, at least since I've been following it.
Yeah, yeah. Well, thank you very much, Justin. If you and your team, you study this stuff, this is all you do. If we have people listening that have lives, they like to go fishing and they would like to subscribe to your service, what can they expect when signing up with Uranium Insider?
They can expect basically a daily communication from us. We track this sector on a daily basis. So every single day, except for Saturdays, I don't go on my computer on Saturdays, by the way. So it is all we do. But I'm not a one-dimensional human being, Steve. Come on, give me a little break here. I've got a garden at least. We cover this every single day. So every day you'll receive either a daily update, like data sheet, where we cover the ETF flows, the sector flows, the physical market flows, that fundamentally move the sector. Ultimately, the bull market is all about the prices going higher. So we want to know what's going on in the physical market. We have a very large network in the industry that we speak to very frequently. We've got contacts that cover Kazakhstan in depth. We've got contacts that are uranium traders, that are fuel buyers. So we reach out into every element of the sector to make sure we're getting a grasp on where things are and where things are going. And we distill all of that down into really what you need to understand as an investor. We, of course, have a focus list of securities that we have recommended. Like you mentioned, we have done quite well since inception. We're coming up on our 5-year anniversary next week, which is super exciting. During that period of time, we've outperformed URA by almost a factor of 2, even including the dividends that URA pays. So we're quite proud of that. We do monthly webinars that are in depth. I do update videos once, sometimes twice a week, covering what needs to be covered in the sector. And then we have a comprehensive, in-depth monthly newsletter. And that is all to say that we primarily focus on the physical market. We want to know who is buying, who is selling, at what price, in what volume. And that gives us a good sense of where things are headed. And with all of that said, they're headed higher.
Yeah, watch the physical market, and that'll tell you what everything else is going to do.
Yep.
Right on. Well, Justin, thank you very much for coming on the show. If you want to check out Justin's website, there is a link in the pinned comment below. And thank you in advance for using that link. It's an affiliate link. Justin is nice enough to kick a little bit back to the show. Doesn't cost you an extra dime. It's a win-win. Justin, always a pleasure. Thank you for coming back on the show.
Thanks for having me, Steve. Always good to see you.
You too. And thank you for tuning in. Be sure to support the show and hit the like and subscribe and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.